We have Britannia's first quarter numbers that have just hit the screens, and we do have a profit after tax figure attributable to shareholders, mind you, that's come in at 545 crore rupees, close to double from the corresponding quarter. No exceptional items that I can see on my screens. So yes, it's an extremely, it's a good performance, and the revenue as well has risen from roughly 2,700 crores in the corresponding quarter. We have it now coming in at 3,420 crore rupees. Remember that biscuit makers like Britannia, Parle, these are the guys we did expect to post a good set of numbers, primarily because biscuits have flown off the shelf during the lockdown. So this revenue figure that we have of 3,420 crores is slightly above the own ET now poll of 3,239 crores. But when it comes to the PAT figure, well, it's through the roof. It's come in, like I said, at 545 crore rupees versus the ET now poll of 413 crore rupees. So that definitely is, a big beat compared to the ET now poll. Varun Berry, managing director of, of Britannia, has written in the press release saying the quarter was obviously an uphill task for the economy because of COVID-19, the significant disruptions as well, factories, transportation, vendors, supply chain, all of which was impacted. But they believe, he does say that, there was a lot of innovative ways in which, the sales team, the supply chain and the support function managed to get through this tough quarter. And he says that as soon as the lockdown was eased, Britannia focused on getting distribution back to the pre-COVID levels. They've also increased their rural and hinterland reach. Naveen Kulkarni now joins us on the show. Naveen, I'm pretty sure you're quite pleased with what you are seeing on your screens. And look at the commentary as well from Varun Berry. He's done the right things. He says that post the lockdown, or rather post the unlock, when unlocking started happening, they decided to increase their reach in rural and hinterland areas, which is basically what we'd like to see an FMCG company do.
Yeah, precisely. I think clearly what they have done is working. So strategically, I think they have made the right moves, and also it's showing in the numbers.
There is also this moderate inflation being witnessed in the prices of key raw materials. We just had the CPI number as well. So there was a little bit of inflation over there. In the midst of that, while I don't have the margin number handy with me, I'm just going to check if it's appearing on our screens. Yes, okay. 21% is the margin versus the ET now poll, which pegged the figure only at 17%. What do you make of this big beat on the margin front and consequently on the profit after tax as well?
First of all, on the margin front, of course, it's a clearly major beat. But only thing that we want to understand is that how sustainable these margins are. Because there was lockdown, there would have been stocking up of by customers, so on and so forth, which would have resulted in a major revenue beat, right? So, which of course results in operating leverage, and so the margin beat. So I would be very, very surprised if these levels of margins are going to sustain over longer periods, right? Because I think the revenue growth trajectory might come down from the current levels, right? That's one thing which can happen post, let's say, a COVID period. But at this point in time, I believe that what they have reported is very, very strong. Question only will be what would be the normalized margins where would be even in this quarter, right? If certain things would not have happened. So probably we'll get some clarity from the management in the conference call today.
Actually, a valid point you make. It's the leverage play as well that led to this big beat and the margins, this big expansion in the margin. What about top line sustainability, Naveen? April to June was the quarter where we did see a lockdown. We did see rampant stocking by customers on things like biscuits, amidst this lockdown. Do you think the spurt as well in sales could be something that could be restricted to the April to June quarter?
So margins, revenue, I think there is a bit of bump up which has happened especially in foods category as a whole, right? So my sense is that in a post-COVID scenario, this level of growth may not sustain. But having said that, I think still the underlying current seems to be pretty strong for the company. So the only question is that what is the excess number that we have witnessed in this quarter, whether it is a 5% or a 10% is what my question will be. However, still I believe that Britannia over the last few years has demonstrated very, very strong growth profile. So I won't be surprised if there are other things also which are playing out, like the unorganized market shrinking and Britannia gaining market share, so on and so forth, entry into new areas. So some bit might actually be sustainable. I think we will get some more insights, of course, one through the conference call and probably in the subsequent quarters.
Well, Britannia definitely has come a long way with Varun Berry last year. Saying about how it's difficult to even get a 5 rupee packet to be sold, to the customer. And now, of course, this massive stocking up by customers amid the lockdown. Packaged foods, reputed brands like Britannia did see quite a high demand away from, the unorganized sector. That is something that has helped April to June quarter. Naveen, before I ask you also about the other segments like bakery and dairy that Britannia did attempt to penetrate into, let me go across to my colleague Vinny Motiwala. Vinny?
So, Mubina, like you mentioned that, all packaged foods and goods have done quite well. Britannia has also done quite well in this quarter. And let's not forget, in the last quarter also, the company had managed to post a decent set of numbers compared to other FMCG companies. This time also, it's done quite well. If you go to see, its revenues are up by around 26%, which is what we were expecting, almost in line with the expectations. Profits have grown 2 times. So, that is also a good set of profits that are posting this time around, and even margins are above ET now expectations, and they stand at around 20.9% versus 14.6%. Now, as we can see that, the company is saying that they expect the raw material prices to be stable. So this quarter we had seen a bit of an inflation over there, but they expect it to be stable going forward. They have a very positive outlook looking at the current monsoon and plus the harvest. So they're quite positive on that scenario as well. And overall also, Britannia has benefited a lot from the in-house consumption, which has led to an increase in the use of packaged food items, plus the distribution chain was also quite widespread. That has led to quite a good deal for Britannia and has helped Britannia a lot, and that is why we're seeing a good set of numbers from Britannia this time around.
All right, so that's Britannia Industries for you. Naveen and Vinny, thank you so much for joining us to decode these Q1 numbers. Okay, just a quick chart check before we wrap it up on the show on Britannia. It's sitting on 0.15% of gains. There was, in fact, a little bit of a dip seen on an intraday basis once these numbers hit the screens. Mind you, decent numbers. Of course, sustainability is going to be key. Whether it can sustain the revenues, whether it can sustain the margins. But like Naveen said, the underlying tone seems to be pretty positive, because maybe now is also the opportunity for Britannia to expand on the other segments, dairy, bakery, where it has been, where things have been a little slower than expected. But now that there's this whole push towards reputed brands, towards packaged goods, maybe Britannia can use this opportunity.